12 months after the halving cycle, no reason why Bitcoin couldn't be at $100,000. Just given what I know about demand and given what I know about the cycle and where the miners are and so forth. And plus, we may get some interest rate relief. And again, that's a 3x bump. That's happened in the world of technology all over the place. So it certainly could happen to Bitcoin. Ethereum, I'm not as close to, although we do have a position in. Could Ethereum be 4,500 by then? Why not? If you look at global market capitalization, Microsoft, Berkshire Hathaway, Google, Bitcoin is the youngest asset to be in that league.
Anthony Scaramucci, the founder and managing partner at Skybridge Capital, a New York-based global investment firm, has given his updated price predictions for Bitcoin and Ether, the two largest cryptocurrencies by market cap. Anthony, a former White House Director of Communications, believes 2024, the year of the much-awaited Bitcoin halving event and a possible Fed pivot, will mark the beginning of the next cryptocurrency bull market. During a recent interview with Altcoin Daily, the Skybridge Capital founder acknowledges that he has made the wrong call several times in the past, but there is a very high chance of a massive crypto bull market within the next 12 to 24 months. During the interview, Anthony also makes some big reveals about one of the biggest topics in the cryptocurrency industry at the moment, BlackRock's spot Bitcoin ETF. According to the Skybridge Capital founder, he was one of the original investors in BlackRock Bitcoin Trust. As a result, he has some inside information on the asset manager's spot Bitcoin ETF application. The most important part of Anthony's reveal is that we are certainly getting a spot Bitcoin exchange-traded fund within the next few months. The renowned American entrepreneur and financier also talks about SEC Chairman Gary Gensler and his continued insistence on witch-hunting the entire cryptocurrency industry. Anthony reveals that Gary was roundly disliked at Goldman Sachs, where he worked as an investment banker, and Anthony also worked for a period of 18 months. According to Anthony, Gary was disliked for being overly sanctimonious and self-righteous, but at least then he was practical. He adds that Gary has grown older now and obviously more arrogant and even more self-righteous. Anthony also accuses the SEC chairman of being a political stooge to Senator Elizabeth Warren, who is probably the biggest hater of the cryptocurrency industry in Washington. According to Anthony, Gary's career is dependent on Elizabeth Warren, which is why he will continue his witch hunt for as long as he is the head of the regulatory agency. We will now bring you clips from Anthony's interview as he discusses Gary Gensler, BlackRock's Bitcoin ETF, and why it is such a big deal for the cryptocurrency industry. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on post notifications, and don't forget to drop your comments and observations in the comment section below. Thanks, and enjoy the video.
I think he's on the political take. I think he's welded to her. She hates crypto. He is a representative of hers, even though he taught crypto and liked things like Algorand when he was an MIT professor. He hates all things crypto. Now, I also think, as you mentioned, SBF, he met with him a few times, and I think he embarrassed him. And I think SBF in general, given the amount of money that he gave to the political community in Washington, has embarrassed a lot of them. And so the pendulum regulatorily swung very hard against the industry as sort of punishment for this embarrassment. Okay. And so it's nonsensical. It's just not good common sense. It's not good policy. But I don't think he's on the take, meaning someone's paying him off, but I do think he's on the political take. I think his career is tied to her, and she hates crypto. And so he represents that. Yeah, so I was I think I was the original outside investor in what is known as the BlackRock Bitcoin Trust. So the younger guys that were talking to Larry Fink about getting into Bitcoin, they came to one of my conferences, explained to me and my partner Brett Messing what they were doing. And they said, well, we really do need an outside investor. BlackRock's going to put up some of its own money, but we really do need an outside investor. And I then said, let's do this. And we wrote a $10 million check into that trust. And so we were the first outside investor. I think they have more now, but when that gets converted into an ETF, Skybridge will have a position in the BlackRock ETF. So I don't know. I am not as bullish as some of these enthusiasts. I see some of them on CNBC saying that the month of October is going to be a big one. We've just started this month, but people believe that we're going to get an ETF in October, a cash Bitcoin ETF in October. If not in October, certainly by the end of the year. I don't see it that way. I think this is a first half of 2024 thing. I think, unfortunately, Gensler is going to try to exhaust everything he can to delay it as long as possible before he actually approves it. But I do think it gets approved because I think that grayscale court case was seminal, and I don't see how Gary or his team gets around that court case. Well, I think it's a huge deal. And I'm not just saying that because I'm a Bitcoin bull. I'm going to give you the empirical data as to why it is. Number one, 35 years on Wall Street. And what do we know about Wall Streeters? Products are sold, they're not bought. There will be an army of people, salespeople, financial consultants, financial advisors, private bankers that will have digital assets as part of their long-term tactical capital allocation portfolios. BlackRock's not going to have $13 trillion under management and have $0 under management in Bitcoin. They're just not going to do that. So what's going to end up happening is you'll have armies of people selling this to people. And then people will say, okay, well, what's your strategy? I'm going to have this much in stocks, this much in bonds, this much in real estate, this much in private equity. Well, what's your digital asset strategy? Well, I'm going to have 0.5% to 2% in digital assets. So think of the magnitude of that. If there's $100 billion that flows into Bitcoin, the guys at NYDIG or Fidelity think that could have a 11 times factor in terms of valuation. So you could see Bitcoin go from a $600 billion asset to a $6 trillion asset. And by the way, if that were to happen, it'd still be half the price of gold.
During the course of the conversation, focus shifts towards the current state of the cryptocurrency market and if current price levels will dictate what the future of the industry looks like. When asked if he's still bullish on crypto assets like Bitcoin, Anthony explains that he remains a big-time bull of assets like Bitcoin, Ether, Solana, and Algorand. He also stresses the importance of doing the work before investing in any crypto asset or project. He adds that when you really do the work before investing, you will have an easier time getting through bear markets and 70 to 80% drawdowns. Anthony also explains that investors who are in for the long term will be able to avoid selling too early and losing out when the industry fully develops. He gives the example of breakout innovations like the internet and the aviation industry, pointing out that it took decades for both to really develop into their full potential, but today we know how much they've evolved. During the interview, Anthony also gives his outlook on the overall U.S. economy, which he believes is heading for an elongated period of economic decline, starting with the housing industry crisis. Here are more clips from the interview.
Housing is very important because 60% of our small businesses are tied to housing. And so just go to your local Main Street. There's a hardware store, there's a plumber, there's a electrician, a sheetrock installer. There's a Subway or a delicatessen that serves these contractors and subcontractors throughout the day. Do you know what I mean? So I could give you a list of all these businesses that are tied to housing. And so you get 7.5%, 8% mortgage rates, which takes us way back. You're going to freeze a lot of people. So if my mortgage is 2 5/8 and got booked sometime in 2019, and I want to move and I need to borrow, I've now got to borrow at 8%. So either I'm moving into a house smaller than the one I'm in, but if I'm moving into a house larger than what I am, I'm picking up a lot of interest to buy that house, right? And so I think it's going to slow down that market. And if it slows down the market, new construction slows down, contracting slows down, all those small businesses I've referenced slows down. So yes, I think we're going to hit a recession. We're going to hit a rough patch, probably in the first quarter of next year. And I think the Fed is going to be forced to cut rates, pause rates. Things are glowing hot right now, but remember, this data lags, and this inflation and this interest rate cycle is going to put a dampener on the economy. So rates get cut, there'll be more risk capital flowing into the business community. That'll be really good for Web3. That'll be really good for altcoins and Bitcoin.
And this recession, is this really going to take Bitcoin and Ethereum, down far?
I think it's going to help. Let me explain to you why. Lower rates means more capital because you're going to have more risk capital flowing. If I can earn 7.5%, I'm a pension fund or an endowment, and I can set up a mortgage-backed security portfolio that earns me 7 to 7.5%. why do I need to be in venture or other things? You see what I mean? But when that rate goes to 3%, and I got to get a 7% bogey, I've got to go into stocks, bonds, crypto, venture, et cetera. So the money flows into more risk-based assets. The other thing I would say is that there are certain macroeconomic factors that are going to help digital assets and digital properties. Number one, we mentioned Gensler. He hates Bitcoin. He hates crypto, but he's lost almost every case that he put up this year. He just got denied on the Ripple case. He tried to appeal it. The judge said, sorry, no can do. Well, it'll be interesting to see if he goes to appeal the Grayscale case. It'll be interesting. Where's he going to go? The Supreme Court? So those 6 conservative judges are going to side with Gary Gensler? I don't think so. So he's just delaying everything. And so you're going to get a Bitcoin ETF. BlackRock believes this. You're going to get a Ethereum ETF. And those are going to drive value. And then, of course, you have the Bitcoin halving coming. Sometime in April of this year, you're going from 900 coins to 450 per day. And that's going to lead to a price increase, because as supply of an asset and demand gets constrained and more players enter the space, it will push the price up. So I'm bullish one way or the other.
Anthony also recently sent out a post on 5 events that will boost Bitcoin price in 2024. His post reads, "Many have predicted a steep rise in Bitcoin. Here are some catalysts as to why. ETF halving, Fed easing, increasing appetite for hard assets as U.S. deficit takes center stage with investors and inclusion in model portfolios. The ETF is huge because it essentially eliminates regulatory risk and solves access issues. Bitcoin is still hard to buy for the vast number of traditional investors. Lastly, for the first time, Wall Street, for example, BlackRock, Invesco, etc., is going to be actively selling Bitcoin to clients. Limited supply." What are your thoughts on Anthony's revelations about Gary Gensler, the BlackRock ETF, and his outlook for Bitcoin and the overall cryptocurrency industry? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on the notifications bell for more videos. Thanks for watching.